IL&FS crisis important for GS/3 preparation/syllabus under economy context. In response to the debt default by infrastructure leasing and financial services IL&FS, the government has appointed a 6-member board to manage the IL&FS. What is IL&FS? IL&FS Limited, or Infrastructure Leasing and Finance Services, is a core investment company and serves as the holding company of the IL&FS Group. IL&FS was funded in 1987 with equity from Central Bank of India, Unit Trust of India and Housing Development Finance Co. to fund infrastructure projects. IL&FS's major shareholders include Life Insurance Corp of India holding 25.3% stake, State Bank of India with 6.42%, Japan Forex Corp holding 23%, and Abu Dhabi Investment Authority with 12%. IL&FS is termed as a shadow bank. The term is used to refer to the non-bank financial intermediaries that provide services similar to traditional commercial banks. Additional information. Non-bank financial companies. NBFC. NBFC is a company incorporated under the Companies Act 1956, which is engaged in the business of loans and advances, acquisition of stocks, equities, debt, etc. issued by the government or any local authority. The main objective of this type of a company is to accept deposits under any scheme or manner. Key differences between NBFCs and banks. Sources of funds of NBFCs. Long-term term loans are taken from banks in a single quantum after deciding on the amount of funds to be deployed in the normal course of operations of the NBFC. Short-term loans offered by an NBFC can be issued by raising funds through commercial paper CPS. CPS are short-term unsecured promissory notes issued by companies with a tenure of 3 months to 12 months. Others, debentures. Debentures are typically issued to raise short-term capital for upcoming expenses or to pay for expansions. It is a type of debt instrument that is not secured by physical assets or collateral. Debentures are backed only by the general creditworthiness and reputation of the issuer. Intercorporate deposits (ICD) is an unsecured borrowing by corporates and financial institutions from other corporate entities registered under the Companies Act 1956. The corporate having surplus funds would lend to another corporate in need of funds. What is IL&FS crisis? IL&FS has run out of money and, therefore, has been unable to service its repayment obligations. According to the latest available data, the company has a total consolidated debt of Rs. 90,000 crores. The crisis began in August 2018, when IL&FS defaulted on the payment of Rs. 1,000 crore that was issued by SIDBI. This was followed by a series of defaults on commercial paper, debentures, term loans, and intercorporate deposits. The series of defaults led to a ratings downgrade. The credit rating of debt instruments issued by IL&FS was rated at AAA highest credit rating till the end of August 2018. Credit rating agency ICRA downgraded the company's creditworthiness to the default grade. Further, credit rating agency CARE also downgraded several subsidiaries of IL&FS. A downgrade in the credit rating led to lowering of price of bonds, which affected debt funds. Factors contributing to default. Assets-liability mismatch. The major reason for the crisis negative asset-liability mismatch is the outflow of liabilities became more than the inflow of assets. IL&FS invested in projects with a gestation period of 10 to 15 years by borrowing for a period of 8 to 10 years and then would get the project refinanced. But in the recent years, the bank stopped refinancing due to RBI guidelines and the company was forced to borrow from the market by issuing CPS and debentures. Investing in long-term assets but borrowing money on short-duration debt instruments led to a huge asset-liability mismatch. Lack of access to short-term loans. Unlike banks, NBFCs like IL&FS do not have access to RBI repo window. Unviable projects. Investment in unviable projects has been a major issue for IL&FS, and nearly 60,000 crore debt of IL&FS is at project level, including road, power, and water projects. The factors which slowed down infrastructure projects and made them unviable are complications in land acquisition, delay in environmental clearances, and consequent delay in completion of projects. Cost escalation also led to many incomplete projects. Lack of timely action aggravated the problems. Structural defaults. The business structure of IL&FS has a fundamental flaw which exposes it to both the financial and project risks in the infrastructure sector. Special purpose vehicle model as a